So the easiest part of crypto must be cashing out the profits, right? Running away to the bank with all your big bags of money? Actually, not always. And even though we're laser focused on making gains, we spend hours tracking charts. One of the hardest things to do for the vast majority of investors is to hit the sell button and to actually sell during the run-up. You see, it becomes a bit nerve-wracking. It's actually much harder to sell than to buy for most people psychologically. So to help make sure you don't find yourself on the dreaded round trip where you just fumble bags worth millions of dollars and end up with nothing in the bear market, let's look at when, how, and why to sell and what to do next with your profits so you can continue growing your wealth no matter where we are in the cryptocurrency cycle. Starting with the topic, of course, of when to sell. By the way, we just published a video on this exact topic of when to sell your crypto, okay? It includes all the key indicators in much more depth. It's just a short overview for anybody who didn't see that video. But if you want to go watch that one, I'll leave a link down below. It goes much more into depth on all this stuff, where we are going to cover specific strategies on how to sell here in a couple minutes. So this is just an overview of when to sell, of course. Look, no one can time the market top perfectly, but the timing is a consideration when planning a profit strategy. When prices are soaring, you're going to feel like you're selling too early, but after the top, you'll be thinking you shouldn't sell on a dip, even if the dip might keep dipping and it might be the start of a bear market. Basically then, forget about the idea of perfectly hitting the top and accept the fact that you will almost never feel 100% comfortable pushing the sell button, because there's always that thought in the back of your mind, what if it keeps going up? So rather than trying to perfectly time the peak, you can sell at other moments, such as when you're reaching a target. Now, reaching a target can have two meanings. One, of course, is to sell when you reach some kind of predetermined price target. For example, you're looking to sell your Bitcoin and you've looked into it and you say, okay, $250,000, that's the number I'm happy to get out at. And you sell there. Don't look back, it's just done. So for example, if you bought a token expecting a 2x, well, sell it if it does a 2x, don't let the greed take over. As long as nothing besides the price has fundamentally changed, then great, take your money and run. The other meaning, though, is to sell when you reach a personal financial goal. Now, that's another interesting way to look at it. Will selling a particular bag pay off a debt, fund a property purchase, or just level up your resources in a meaningful way that so you can invest maybe with more size moving forward? Or is it just that old saying, like, if you have life-changing money on the table, change your damn life? Seriously, a lot of people have that money sitting in front of them and never take it. Gotta take it. In that case, it can be a good time to sell. Otherwise, though, you can basically aim to sell during bull market froth. Now, as I said, forget about hitting the exact top of the bull market. There's only like one dude who perfectly sells the pico top on any coin, and it's probably not gonna be you. But you should remain aware of where we are in the 4-year Bitcoin cycles. You can, of course, check in with some of the indicators that are historically good at signaling the Bitcoin top. Things like the Pi cycle top indicator, the net unrealized profit loss indicator, or the NUPL, the MVRVZ score. These are all freely accessible tools you can find all over the internet. In combination with those tools, you can actually also use some pretty common sense, to be honest, which kind of goes out the window in a bull market if we're keeping it real, okay? But try to keep some rationality about you and look around at that bull market froth when crypto's all over the mainstream. Altcoins have performed 1,000% in the last month, all that kind of stuff. Everything's smashing new all-time highs. The charts look like the Burj Khalifa. Meme coins and NFTs are hitting redonkulous levels. And meme coins are starting to go for millions of dollars a piece again, or sorry, NFTs are going for millions of dollars a piece again, then you know it's time. Now, if these signs match up with the cycle indicators that I just mentioned, you may want to be edging nearer to the exit before the music stops, because the music will stop, okay? And there's not gonna be many chairs to sit in. You don't want to be left out. However, a quick caveat here, there will be signs of froth throughout the bull market, and bubbles can go on for much longer than you might reasonably expect. Well, this cycle is very, very exciting. We see institutional adoption of crypto actually occurring, as we can see with the Bitcoin spot ETFs, and we have stuff like the Trump administration's pro-crypto plans. So things could go crazier than you think, right? Don't be afraid to let those bullish catalysts play out. Don't be afraid to let the bull vibes enter into your life and those good vibes, man. But you still have to sell, because at some point, there will be another ferocious bear market with complete devastation across the crypto space where everything goes down dramatically, gut-wrenchingly pukes the entire market. Now, before we look at the actual selling strategies, how to sell your coins, a quick shout out to today's sponsor, which is CoinStats. This is a fantastic tool that you can use to to save your time and to manage your entire crypto portfolio all from one spot. CoinStats is an awesome product because it connects to pretty much any cryptocurrency exchange or wallet out there and tracks all of your transaction history so that you can keep track of your portfolio the easy way. With CoinStats, you can get best-in-class profit and loss analysis with portfolio analytics. Look, it's essential to know your profits during the bull run, obviously. Know your total cost, the amount spent on acquiring the assets, your unrealized profit and loss, the profit or loss on the assets they haven't even sold yet, realized profit and loss, how much money you've actually made or lost. You can check your detailed asset profit and loss transactions all in CoinStats. With Wallet Explorer, you can actually search wallets across 120 different blockchains and see detailed analytics. Now, if you want to follow any wallet as well, and this is some real alpha here, you can just add it to your watch list. You got a whale who's been nailing all the meme coin calls, add them to your watch list. You can even turn on notifications for those wallets to track them once they buy or sell a new position, which can really help you stay ahead of the game by following the smart money. And if you don't want to connect, you can also do everything manually, okay? It has heaps of cool features like portfolio analytics, historical graphs, which means, of course, it does all of the heavy lifting for you. Now look, recently I've noticed they're also bringing in some really cool AI features, which are going to take CoinStats to the next level again. And if you're someone like me who uses multiple wallets, so many exchange accounts, then it's an easy decision to use a tool like CoinStats. It's super useful. Additionally, CoinStats has an easy-to-use mobile app because we're all on the go. We can manage portfolio right here. Keep up to date with those notifications for the whales and stuff like that. It's got a great user interface. You can check all your balances just at a glance. And here's the kicker. CoinStats is giving the Lark Davis community, that's you watching the video, a 50% discount by using my link down below in the description. That's an awesome deal. Go check it out and support our sponsors. Now let's talk about the how to sell part. Look, there are a lot of different strategies that you can adopt when it comes to switching your crypto for cash, okay? One useful method is laddering out. Your dollar cost average in means you ladder in, your dollar cost average out, you ladder out. This means selling in increments rather than all at once, meaning that you'll be gradually reducing your position and your risk while the price is running up. So for example, you may want to take out your initial investment after a coin has done a 2 or a 3x, then sell some more in increments of like 10% as the price hits different particular price targets every time it goes up 50% or every time it increases by $1 or whatever it might be. You can adopt this approach as you prefer, and there's a million different combinations of how you could do this with different coins, but you're aiming for a gradual transition of your portfolio from crypto to cash, because that's what you do during a bull market. If you think a token still might hit really crazy valuations, maybe you sell a bit slower at the front and you keep more for later, or you just keep a moon bag that you're gonna have no matter what happens. That's just a small amount after taking profits in case it goes absolutely crazy, so you can stay exposed without any stress, of course, because your profits are already out and your capital's already out. The pros of laddering out, of course, it reduces the risk of mistiming the market, which most people do. It locks in profits while keeping some exposure. It tracks a changing risk-reward ratio as well, and it helps you manage emotions by ensuring you stick to a plan. On the other hand, there are some cons. It means you cannot take the absolute maximum possible gains on any position, which of course everyone wants. I want every damn penny out of this market. It's probably not going to happen. Reduce the stress, get as much as you can, not the maximum possible available theoretically in the market. It also does make tax calculations a little more complicated. But again, it also creates the positive habit of selling, which a lot of people only leave until the last second at the top of the market. And that's too stressful. The numbers are too big. It's too crazy. I can't sell now. What if it doubles tomorrow? I'd be rich beyond belief. And then you sell nothing and it goes to zero. On the other hand, instead of laddering out, of course, selling all at once. The high stress method, okay? But the higher profit method. This means at some point, hopefully as close as possibly to the top, you hit the sell button on your entire position. Offloading it all in one go. Ideally not in a market order if you're dealing with really, really big numbers, don't want to smash liquidity and lose more money. Anyway, this is a different conversation. Now, compared to laddering out, this sounds a little more reckless, but actually it can sometimes be an effective strategy if you're willing to take that risk. The pros are you immediately realize all your profits, reducing complexity and freeing up funds. It completely locks in all gains and removes the possibility of giving anything back to the market. assuming you time it right. But on the other hand, the cons are it increases the risk of exiting too early, feeling FOMO if the prices continue to rise, and it turns selling into a high stakes emotional gamble. You're either all in or you're all out, and you might make erratic decisions. And you can do this with some coins. You can just sell some coins, right? Some coins you may not be interested in anymore. Maybe you've got enough money on them. You don't have to exit all crypto either at the same time. Generally, it can be a pretty stressful trading experience when you're trying to go all in or all out on any coin or your entire portfolio. But now that we've looked at when and the how, let's consider why to sell crypto. So we touched on some of this before, but let's sum up exactly why you need to hit the sell button. The main reason is, of course, to lock in the damn gains. This is a super volatile asset class, and we love the volatility. The volatility is great. That's how we get outsized returns in the market. Volatility is your friend on the way up, and it's your enemy on the way down, because that volatility also means that profits can be wiped away like that. You're up millions one day, you're down millions the next. Been there before. Crypto is also crazy because there are coins that can briefly, deliver crazy profits in minutes or days and then crash and burn and never recover ever again for a variety of reasons. Also, the window for parabolic gains is pretty narrow. Bitcoin's top prices are very, very small, very short window, weeks, maybe at the best. The part where crypto goes crazy and everything starts flying is just once every 4 years, essentially. So when it comes around, you need to take your gains before the market takes them back for you. It's very efficient at doing that, and it will do it mercilessly. The next reason for selling is, of course, to rebalance your portfolio. Now, this is a little bit more nuanced, right? When the cycle's bullish, it makes sense to weigh an investment portfolio heavily towards crypto. But that also means that you need to, at some point, rebalance back towards maybe more traditional assets, things like stocks, bonds, real estate, metals, right? Now, before crypto falls into an inevitable, brutal, vicious, disgusting bear market, because seriously, guys, seriously, that's going to happen, okay? Crypto bear markets are going to come. They always do. They come really fast. You wake up one day and it's over, and it's over, and that's it. I know you were planning to perfectly sell the top, but you just missed it. Sorry. But there's also another reason to sell, which is, of course, achieving financial goals. Now, we mentioned this before, but to be clear, if you look at your crypto portfolio and it can change your life, then please change your life. I have no idea how many times people have screwed this up, man. And then they spend years wallowing in despair. Finally, you might sell, of course, to reinvest into new opportunities. Cashing in crypto doesn't mean your investment journey is over. In fact, taking profits frees up capital to invest in new things. Now, to be clear, you don't want to go from a coin you just made a lot of profit on at the top of the bull market and throw it in a new coin, hoping to make more money and double your money again. You're probably going to lose if the market's over. Just to be clear, okay? Now let's focus on this point in a little more detail about what to do, right? So what to do with your profits after selling. So you sell your crypto, and then what? You still want to make money, okay? Crypto's a great game. Come back in the bear market, of course, obviously. So you take some profit. Maybe you want to actually spend it. This is also okay too. But if you're watching this, I'm going to guess you're probably focused on growing your wealth, and go out and buy a watch, reward yourself, whatever, it's fine, right? You might also want to diversify away from crypto though. And that's to reinvest some of that money back into traditional assets. As fun as crypto is, it's a very time-sensitive game. You can come back to crypto when the time is right, okay? No one ever seems to leave forever. But after the bull market peak, keep your capital out of the market. Put it elsewhere, okay? Seriously, this stuff all goes down 90% in the bear market, man. Some of it 99.999%. Wait till the bear market bottom and then re-enter. Until then, stocks, ETFs, bonds, real estate, gold, private equity, lots of stuff out there to put your money into, okay? High interest savings accounts, boring but safe, right? If you've increased your available capital through crypto, you're gonna have a lot of options, and you should take some time to step and look and consider those options. Alternatively, you can reallocate to stable coins rather than withdrawing everything as fiat. When you hold stable coins, gains are of course locked in, but you still have funds in the crypto market on a crypto wallet. So you're ready to take advantage of opportunities, but don't get overly greedy and start putting money into a bunch of DeFi and stuff like that, because these things tend to break during the bear market, and that's when you lose all your money, okay? It's happened to a lot of people. Now, if cycles continue to play out as they have so far, again, redeploy cash during the bear market, buy your favorite crypto coins again, run the whole rodeo again, make more money. It's an easy process if you're sitting in stables, but you can't buy the bear market bottom if you don't take profits in the bull market top. Also, staying engaged with crypto can give you a real edge on the crypto market when it picks up again, right? You don't need to dial out completely. You can dial it down a little bit, but not out completely. Also, don't forget you can earn interest on stable coins in DeFi and centralized platforms, but again, there are risks. You don't necessarily need to chase that. Yields tend to fall during the bear market. Finally, though, the part of crypto everyone hates the most, taxes on crypto profits. This is a big mistake a lot of people make. Yes, when you take profits, you have to pay tax in almost every situation, unless you're living in somewhere like Dubai or whatever. But for most of you, crypto profits are subject to capital gains tax. And in general, it's a simple calculation. It's your selling price minus your purchase price equals the capital gain, okay? Remember that losses can be used to offset gains in many jurisdictions, but not all jurisdictions. You should talk to a tax person about this stuff, obviously. Check your tax allowances, et cetera, et cetera. And it depends on very much on jurisdiction, but you'll be allowed to make some capital gains up to a certain limit, which might not even be taxed in some situations. In the USA, for example, you also need to consider there's stuff like short-term gains. So if you held that crypto coin for less than a year, then the tax rate's actually going to be higher. But if you held it for more than a year, then you fall into the long-term gains bracket. It's a pain in the ass, guys. Let's just keep it real. Taxes suck big balls beyond belief. But what sucks even more is not paying your taxes and, getting in big trouble because of that. So pay your damn taxes or move countries somewhere where you don't have to pay taxes. And the tax system's changing all the time, and you have to stay up to date with rules and file all kinds of paperwork and pay an accountant all kinds of money, and just the amount of time. It's fucking taxes, man. Anyway, pay your taxes. Also, you can make the whole process easier with specialized crypto tax software. It hooks up wallets and exchanges. There's a lot of great products out there. You can check down below for our preferred partner. There are also, lots of great accountants out there to find as well. So people with crypto experience who can tell you the local laws and keep you up to date on things. And if you're in any doubt about your taxes, obviously speak to a professional, guys. Again, that's very, very important. They are out there. They're hard to find, but they're out there. For now, though, make sure you're ready with a good strategy, lock in your gains. Don't forget to pay your taxes. Don't get caught out late after you've taken all this money, you've perfectly timed everything, but you forgot to pay your taxes, and now you're there looking at the bottom of the bear market. Yeah, I'm gonna buy all this stuff. Oh, there's the tax bill. All my money's gone because I screwed up. Take it seriously. Thanks for watching.